For the first time since the experiment started, TQQQ is ahead, 0.92% up, VOO 0.45% up. Both portfolios are in the green, but the amplified one is pulling away. Nothing in this channel is financial advice. This is an experiment, it's entertainment. Always do your own research before investing anything. The numbers. 3 weeks into the experiment, and for the first time, TQQQ is actually winning. And here is where we stand. In portfolio A, VOO has a value of 44.45 euros, which is a plus of 0.45%, which is a profit of 20 euro cents. In portfolio B, that's the amplified one, with TQQQ, the value is 45.10 euros, which is an increase of 1.92%, which has 0.86 euros profit. So the current leader is TQQQ, which leads by 65 euro cents. Both portfolios are positive for the first time. O is up almost 0.5%, TQQQ is up nearly 2%, and the gap has flipped. 3 weeks ago, TQQQ was losing by nearly 5%. Now it's leading by 65 cents. This is exactly the kind of week that makes this experiment interesting, because it would have been very easy to panic during week 1 when TQQQ was down more than 5% and just stop buying. The people who stopped buying TQQQ in week 1 missed this week. And that's the whole point of daily buying. You do not try to time the market. Let's take a look at the Fear and Greed Index. This week the index sits at 44, essentially the same as last week, which was 43. However, it's still in fear territory. But here is something interesting. 3 weeks ago, when this experiment started, the index was at 31, deep in fear territory. Now we are at 44, almost touching neutral. Investors are getting less scared week by week, and you can see that reflected in both portfolios, which are now positive for the first time. And when fear drops, growth stocks tend to recover, and TQQQ, which amplifies that recovery, benefits the most. But also this week, earnings season kicked off with TSMC in focus. This week, investors turned their attention to the start of earnings season. The most important upcoming report for technology investors is TSMC, which is Taiwan Semiconductor Manufacturing Company. TSMC supplies chips to Nvidia, Apple, AMD, and Broadcom, which means its results are one of the best indicators of whether AI demand is still genuinely strong or starting to slow down. Investors bought technology stocks in anticipation of strong results that lifted the Nasdaq and therefore TQQQ. Event 2. Inflation data kept markets cautious. Markets were also waiting for key US inflation data this week. The Consumer Price Index, or CPI, tells us how fast prices are rising. If inflation is coming down, the Federal Reserve might start cutting interest rates later this year. Lower rates are generally very good news for growth stocks, like those in the Nasdaq, because future profits become more valuable when borrowing is cheaper. Investors were cautious ahead of this data, which is part of why the Fear and Greed Index stayed below neutral. Event 3. Rising oil prices added uncertainty. Renewed tensions between the US and Iran pushed oil prices higher this week. Higher oil prices are generally bad news for stocks for 2 reasons. First, they increase costs for businesses. Second, they can put inflation higher, which makes it harder for the Fed to cut interest rates. That created a headwind for both portfolios, but VOO, with its broader diversification, including energy companies, handled it better than a pure tech index would. So last week, I explained what an ETF is and why VOO tracks the S&P 500. This week, I want to explain what TQQQ actually tracks, because TQQQ does not just track the stock market, it tracks a very specific corner of it. TQQQ tracks the Nasdaq-100. But what exactly is the Nasdaq-100? Let me start with the Nasdaq. The Nasdaq is a stock exchange. Like the New York Stock Exchange, it is a marketplace where companies list their shares for people to buy and sell. The Nasdaq was founded in 1971 and was the world's first electronic stock exchange. When technology companies started going public in large numbers in the 1990s, many of them chose to list on the Nasdaq. Apple listed on the Nasdaq in 1980. Microsoft in 1986, Amazon in 1997, and Google in 2004. And over time, the Nasdaq became synonymous with technology and innovation. Now, the Nasdaq-100 is not the entire Nasdaq exchange. It is a specific index of the 100 largest non-financial companies listed on the Nasdaq. Non-financial means no banks, no insurance companies, just technology, retail, biotech, and consumer companies. Here is how the Nasdaq-100 compares to the S&P 500, which is what VOO tracks. The S&P 500 has 500 companies across all sectors: technology, healthcare, finance, energy, utilities, consumer goods, and real estate. The Nasdaq-100 has 100 companies, and roughly 60% of them are in the technology sector. The top 10 companies in the Nasdaq-100 right now include Apple, Microsoft, Nvidia, Amazon, Meta, Tesla, Broadcom, Alphabet, and TSMC. Those 10 companies make up for 50% of the entire index. Compare that to the S&P 500, where the top 10 companies make up about 35%. The Nasdaq-100 is more concentrated, more dependent on a small number of very large technology companies. When those companies do well, the Nasdaq-100 does very well. When those companies struggle, the Nasdaq-100 struggles a lot. So now you understand why TQQQ behaves the way it does. When Nvidia announces a great quarter, the Nasdaq-100 jumps, and TQQQ jumps 3 times as much. When a Chinese company announces it is developing a competing AI chip, the Nasdaq-100 drops, and TQQQ drops 3 times as much. That's not a bug, that's how it's designed, this amplified index TQQQ. Because TQQQ is 3 times the Nasdaq-100, and the Nasdaq-100 is essentially 3 to 4 big technology companies with 500 smaller ones attached. This is why comparing TQQQ to VOO in this experiment is such an interesting question. VOO bets on the entire US economy, TQQQ bets on the biggest technology companies in the world, amplified 3 times. In a world where technology faces real disruption, regulation, or a sustained bear market, TQQQ could lose 80% of its value. That's the experiment, that's the question, and we have 3 weeks of real data so far. Next week, I will explain how TQQQ actually amplifies those returns. What happens inside the fund every single day. So, after 3 weeks, here is where we stand. Portfolio A, the boring one, VOO, 44.45 euros. That's plus 0.45%. Portfolio B, with TQQQ, has a value of 45.10 euros, which is an amplification or an increase of 1%, 92. So the current leader is TQQQ, which leads by 65 euro cents. The amplified one is ahead for now. Subscribe so you do not miss how this unfolds. And like every week, may the best ETF. However, before I go, I have one last question. TQQQ is now ahead after 3 weeks. Would you have stopped buying during week 1 when it was down 5%, or would you have kept going? Drop your honest answer in the comments. Have a nice week, and I hope to see you next week.